Lehman Brothers was the fourth largest investment bank in the US at its time of collapse. In August 2007, their stock had fallen sharply with the failure of Bear Stearns hedge funds. Lehman Brothers had a huge $85 million mortgage portfolio which made them vulnerable in the deteriorating market conditions. Lehman Brothers was carrying a lot of assets at inflated values and they hid its debts using the Ripple 105 transactions, recording them as sales and not loans on the financial statement, thus materially misleading the users. The bankruptcy examiner's report spelled out in details the lack of internal accounting control on the values of Lehman Brothers' collateralized debt obligation portfolio. There was a unit called the Product Control Group in the company whose job was to double-check the valuation of assets held by the trading desk, but they did a terrible job. Lehman Brothers was unable to pay its debts as they fall due. Both Barclays and Bank of America pulled out of agreement for Lehman Brothers' possible sales, which rendered them with no other choice but to file for bankruptcy. Now, we shall watch a documentary about what happened during 2000 to 2008 for Lehman Brothers.
Boss, I read the revised gap. It has a section on repurchase agreement that allows financing through the pledging of collaterals be categorized as sales instead of financing if certain conditions are met. Under gap, when we lose effective control over the asset, we are able to treat it as sales to inflate our earnings and cash. This method is known as Ripple 105.
So now I shall explain what is Ripple 105. Let's say we, Lehman Brothers, pledge $105 worth of assets to a bank and only get back $100. It can be said that we lost the effective control over assets. Thus, it allows us to treat as sales instead of loan.
Usually this loophole can be exploited, and what can we do with this?
Of course, instead of using assets, we use our collateralized debt obligation and securities. It will allow us to temporarily remove them from our balance sheet and change it to cash instead. Users of financial statements will definitely think that we are doing well as it boosts our debt to equity ratio.
We might be able to use this loophole after all.
The CEO of Lehman Brothers claimed that he was unaware of the issue and did not know of the transactions. He did not structure or negotiate them, nor he was aware of their accounting treatment. This inadequacy of the CEO knowledge of the accounting treatment of Ripple 105 misled the users of their financial statements.
What we have done is of no wrong. We did it correctly and in accordance to under the US GAAP.
We have given unqualified opinion that the statement is prepared in accordance with GAAP, which is the truth. Look at this. We do not approve or evaluate the Ripple 105 accounting policy against FSAS 140. However, we got comfortable with the policy for the purpose of auditing and did not pass on the actual practice. In addition, our responsibility only is to inquire if Ripple 105 were accounted correctly, not the timing nor volume of such transaction.
Yes, it is in accordance with the GAAP. However, professional standards provide that technical compliance with the GAAP is not sufficient to provide an unqualified opinion. Generally accepted accounting principles recognize the importance of reporting transactions and events in accordance with the substance. The auditor should consider whether the substance or transactions or events differs materially from their form.
Welcome to the talk show. Today we will be talking about Lehman Brothers. And we have invited Matthew Lee and the audit committee of Lehman Brothers to our show. Hi Matthew, are you aware of this fraud?
Yes, I do. In fact, I written a letter to top management, but there was no action taken. Look at my letter.
Well, this proves that the top management knows about Ripple 105 and done nothing about it. So what do you have to say, audit committee? Are you aware of it?
Well, we have only found what was going on until we read Matthew Lee's letter, and we had requested to be in the know regarding this, but it was all too late.
Why was this not discovered earlier?
According to our accounting policy, which was supported by our top management approval, we basically went ahead knowing it was a proposed procedure.
So you are saying that you are not doing your job of auditing and checking the company? Next, I would like to clarify about the remuneration scheme for the CEO. It was stated that the CEO received $484 million in the form of salaries, bonuses, and stock options since year 2000. How was that possible when the company was actually going red?
We have failed to pick this gimmick up because we were misled with the actual state of the company. and that is why it happened.
Okay, thank you for your time. Now we have come to the end of this segment. Welcome back. For this segment, we have with us an expert Lei to state his views on this issue. Hi, expert Lei. Can you share with us your opinions?
Sure. Firstly, the financial statements published by Lehman Brothers are inaccurate. Secondly, Ernst & Young, being the external auditor for Lehman Brothers, has given unqualified opinion on these financial statements. Given the reputation as one of the most established auditing firms, users of the financial statements will have no questions on the integrity of the audited reports. Thirdly, investors rely heavily on these financial statements published and make investment decisions based on it. If adverse opinion or qualified opinion were given instead because of the inaccuracy of the financial statements, investors and users would have been cautioned. Fourth, the reputation and the image of the auditors have also been greatly affected, as the public will feel that auditors are not doing their job properly. In addition, this will definitely lead to more stringent audit policies and accounting principles to be developed to prevent potential loopholes being exploited in the future. Last but not least, if the Report 105 was found out earlier by the external auditors and the correct action was taken, the collapse of Lehman Brothers would have been averted.
Okay, thank you for your time. Now we have come to the end of the talk show.
In summary, the main reason for the fall of Lehman Brothers is due to failure in the mortgage property business.
The accounting failure is mainly due to the Report 105 and the over-evaluation of the collateralized debt obligation.
Corporate governments play an important role and oversee the internal process of the company, which in this case, the audit company has failed its job along with the internal auditors.
In conclusion, companies should have systems and structure in place to prevent or detect such problems.
However, certain policy can be corrected or changed for the better, only when it's happened. For example, the Lehman Brothers case which took advantage of the loophole of GAAP.
Auditors play an important part in the business world. Their role is to ensure the integrity of the financial reports released to the public. For instance, if Ernst & Young had stepped forward and raised the issue while reviewing and auditing Lehman Brothers, such cases wouldn't have happened. With this, we have come to the end of our video.